Welcome to the Capital News. I am your host, Alex Karitis. Today is February 12th, 2020. Thank you so much for joining me. Just a little note before we get started here today. I did do a podcast yesterday. However, I ran into a little bit of a technical hiccup with my internet connection for whatever reason. Wasn't able to get it back on and going. That has since been fixed. So I do have that episode posted as well. So you're going to see two episodes posted this evening. You will have episode 321, a letter from my senator, where I go over the response from my senator in regards to my email that I sent to him in regards to the impeachment trial that just took place. So check that episode out. Again, episode 321, a letter from my senator, that is posted. And then the title of today's podcast is Economic Disconnects. So we're going to get back to talking a little bit more roughly here on the economic side of things. Of course, we are going to mix in some politics because we are in an election year. We just had the New Hampshire primary, which we discussed on yesterday's podcast. Bernie Sanders was the winner of that. However, the delegate split, he got, I think it was 9 delegates, and so did Mayor Pete Buttigieg. So right now it's a two-man race coming out of Iowa and New Hampshire on to Nevada in South Carolina. We'll see what happens there. It's going to be a do or die for Vice President Joe Biden if he cannot win and sort of run away with it, particularly in South Carolina. That seems to be where he is attempting to hang his hat. If he doesn't win by a large margin, he's going to be in some trouble. Now, if it's a tighter margin, he can probably hang on, obviously, for a few more days to see what happens on Super Tuesday. But I do think it's going to start boiling down here, and we still have Mayor Michael Bloomberg spending a lot of money, which is a drop in the bucket for him, $300 million thus far and counting. Again, that's a drop in the bucket. I mean, if he had all of his wealth, $60 billion in a security, in a 30-year treasury yielding 2%, just the interest alone he's getting from Uncle Sam is $1.2 billion. So it's a drop in the bucket, believe me when I tell you. He doesn't even know it's missing, which is an unbelievable thing to say, but more power to him. He is self-made. He built his company, and he continues to do so. So more power to him. We do not demonize wealth here. We are not the Socialist Party of Bernie Sanders. Some other news on the political front. We have presidential contenders Yang, Bennett, and Governor Deval Patrick all suspending their campaigns. This is no surprise, I imagine. In short order, we will probably see Representative Tulsi Gabbard probably suspend her campaign. Billionaire Tom Steyer will probably do so as well. Who else is sort of in the mix on the fray? It's going to get interesting. I mean, it's starting to whittle down. We're going to have to see if Amy Klobuchar can continue with her momentum. Otherwise, she's probably going to end up being in contention for a vice presidential pick, I would imagine. Elizabeth Warren, same type of thing. I don't know if she would be in contention for a vice presidential pick, but she has to form her own lane. She cannot sort of stay in the rearview mirror of Bernie Sanders. She has to chart her own course, but it might be too little too late to do so. But she's probably going to hang in there, I would imagine, until Super Tuesday to see where she falls in that regard as well. So, this is what happens. You make progress, people start to fall off. That's what happens. That's the process that people are speaking. And so it's going to start getting a lot, it's going to get nasty. It will get nasty, especially when we have the convention. And then it's whoever that pick is going to be versus Donald J. Trump. It is going to be some entertaining television for sure. Make no mistake about it. We continue to have primarily the liberal media, MSNBC and DOJ, harping on the story which we talked about in yesterday's podcast with Donald Trump and the Department of Justice regarding his former confidant and political advisor, Roger Stone, because Roger Stone was convicted by a jury, not by politicians, not by the Justice Department, by a jury. Okay? So understand that. But nevertheless, they are making this out to be a constitutional crisis in the making, something that they're saying, we told you so. And guess what, folks? I said this months ago, before the whole impeachment thing and during the impeachment thing. The whole trial, the investigation, the inquiry, everything. I said, you watch and you see, because it was pretty much a foregone conclusion that the president was going to be acquitted. The question and my concern was, will he do it again? Will he feel exonerated? Will he feel vindicated? And what will the argument become next? Because if he does go off the reservation, if he does think he is above the law, if he does truly believe that Article 2 gives him the power to do whatever he wants, then we could be going down a very slippery slope. And right now, the liberal media and a lot of the Democrats in the House and in the Senate are arguing that it's only been a week since his acquittal, and we're already at that stage. Because the prosecutors set forth their recommendation as to the sentencing for Roger Stone, about 7 to 9 years. President Trump takes to Twitter he does not like this sentencing, which is public. This is not a secret document. This is a public document that Justice Department prosecutors turned over to the judge. It was their recommendation, 7 to 9 years for the counts that he was convicted on. Trump didn't like it. He said, this is ridiculous. This judge went after this person. He's calling out the judge. He's calling out the prosecutors. Did they work for Bob Mueller? They didn't go after Hillary Clinton. The other side gets no time. My people get all of this, blah, 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 blah. And lo and behold, the higher-ups within the Justice Department intervene in the matter and say, oh, yeah, we think that this recommendation, the sentencing recommendation of 7 to 9 years is too harsh. We don't like it. And then, of course, Donald Trump comes out, takes to Twitter, makes comments. Right on, Attorney General Bill Barr, you're doing the right thing. Good job. Have at it. So, basically, what I was warning against and saying was going to be a possibility, either in reality or just simply an argument that was going to be made by the left, by the Democrats, was that the president is going to start to weaponize his Justice Department, that he is going to use the FBI and the prosecutors within the Justice Department as his personal detectives, his personal legal team to go after people and maybe corporations that he does not like, that he thinks are the enemies, that they are the resistance. And we know during his speech, or whatever you want to call it, in the East Room of the White House, following his acquittal, he basically gave us his hit list, his enemies list. I'm telling you, the language is very concerning to me. Understand your history. This is not, again, singling out Donald Trump. When people speak like this, it is cause for concern. When you're either with me or against me, if you're not with me, you're my enemy. If you're not with me, you're my resistance. That's highly problematic. Highly problematic. And when you have the credibility issues that exist with this president, with this administration, it just compounds the problem, just makes it that much worse. And again, this is not just Donald Trump. Republicans, Democrats, previous administration, same song and dance. The thing that a lot of people were hoping, myself included, with President Trump was that he was going to be somebody different. He was going to rise above all of this. That he wasn't going to get into the mud with all of this divisive rhetoric. But I guess we shouldn't be surprised. But that's where we find ourselves. The left is going to continue to harp on this for as long as they can. What they're actually going to do about it, who knows? I think you have Senator Chuck Schumer, the minority leader in the Senate, coming out and already asking the Inspector General of the Justice Department, Michael Horowitz, to start investigating this, because this is an abuse of power by the president, asking his Attorney General to get involved with this case that was already being handled. Now, of course, you have to remember, the judge on the case, she has the final say-so. She has the final say-so. She could agree with the president. Now, she could say, well, 7 to 9 years seems fitting for me. That's what he gets sentenced to. Or she could say, no, that's a little too much. I think it's going to be maybe, 3 years seems more reasonable, 3 or 4, something like that. She has the final say. She could probably go beyond it, although I think going beyond 7 to 9 years would be a little too harsh. 7 to 9 is probably a little bit too harsh. There's even people, liberal pundits and people who are no fans of the president by any stretch of the imagination, or Roger Stone, who have come out, I've seen on MSNBC and CNN, coming out and saying the sentence of 7 to 9 years is probably a bit much. It is probably a bit much. But nevertheless, they too are concerned with, is this president going to weaponize and use the Justice Department as his personal attorneys, as his personal detectives to go after his quote-unquote enemies or people he does not like. That is a concern. It's always a concern. It's always a concern, not just under this president, but any. But we know the thoughts of this president to some degree because we definitely know his words, we know his rhetoric, and we know some of his actions. So it is something to be mindful of. We'll keep you posted on that. Market performance. Again, another up day. Can't go down, right? We have the Dow Jones Industrial Average gaining 275 points, a gain of almost 1% for the day. The S&P 500 gained 22 points, up 0.6%. The NASDAQ 100 accelerating up 92 points, also almost a gain of 1%. Look, folks, you cannot keep it down. No matter what happens, no matter what the headline is, stocks just keep going up. Jay Powell gave his testimony to the Senate side today. Everything's fine. Nothing to see here, folks. Don't worry about a thing. We're just going to keep humming along. The economy's in a good place. Although he did have to finally admit, I guess, that monetary policy is going to be less effective if we enter a recession. And it's not if, it's when. Just a matter of when. They've done their job, I guess you could say, of kicking the can further down the road. Expanding the business cycle in conjunction with the White House and Congress with all of the fiscal stimulus that's been taking place in the form of those tax cuts, which are causing trillion-dollar deficits, deregulation, and all of the money spending from the government, obviously, and a lot of it going to the military-industrial complex. And then you have 3 interest rate cuts from the Federal Reserve, quantitative easing, although we're not supposed to call it quantitative easing, and then you have the overnight repo madness, which is going to continue at least through April of this year. We were told back in September it was a one-off, it was going to be temporary. Pay no attention to the man behind the curtain. No. We told you that was not going to be the case. There's still no explanation as to what is causing the overnight repo madness. What it is in a nutshell is it's the market's attempt to say interest rates are too low. We're not having it. We don't like the counterparty risk. Even on an overnight basis, you have to give me more. That's why those interest rates spiked to 8, 10% in some instances, which is extremely hard to believe. But that just tells you how strong the market is, because that, ladies and gentlemen, should never happen. It should never happen. The Federal Reserve is supposed to have pretty much complete control over the short end of the curve with these interest rates. So if you have the market saying, oh, no, it's going to spike to 8%, 10%, that's cause for concern. But of course, they're not going to tell us what it is. They might not even know the true genesis of all of it either. Of course, they're part of the problem. No ifs, ands, or buts about it. And we have a president who continues to call for lower interest rates, even negative interest rates. And again, this audience should know, if you've been with me, how dangerous and detrimental that is to a society and to an economy. That should never be asked for. And clearly, the president cannot connect the dots when he comes out on multiple occasions, even again at the State of the Union address, which he stated at a previous State of the Union address, I think the year prior, that this country will never be a socialist country. Well, if you're going to start calling for negative interest rates, that ain't free market capitalism, Mr. President. Not even close. Not even close. So I don't want to hear it, that this country will never be a socialist country. It's too late. It's already here. Social Security, Medicare, Medicaid, corporate welfare, social welfare, the military-industrial complex. I mean, give me a break. You think this is free market capitalism? Can't have a stock market go down? I mean, it can't even go down. It can't even go down. There's no price discovery. You know, you have to recall, it was either late 2018 or early 2019 when Tim Cook, the CEO of Apple, came out and told the markets, we are giving you guys forward negative guidance. Forward negative guidance. The market sold off, took a hit. The next day, the very next day, the Federal Reserve comes to the rescue, and basically the markets recoup what they just lost. And that was severe, I remember. It was a big hit. Since then, ladies and gentlemen, the share price of Apple has almost doubled. It has almost doubled since the CEO announced that we are going to give the market negative guidance. You cannot make this stuff up. And if you look at the internals of Apple, their financials, their profits have peaked. They're not going up. They've peaked. Remember, I talk about it here all the time. Corporate profits, and this is all of them, as aggregated by the U.S. government, corporate profits in this country, the United States, peaked in the year 2014. So I don't know how this can be the greatest economy ever if we have corporate profits that peaked in the previous administration in the year 2014. Despite the deregulation, despite the tax cuts, despite the Federal Reserve and other central banks printing money, despite all of the financial engineering or rigging or corruption, whatever you want to call it, taking place, corporate profits peaked in 2014. This is all a smoke and mirrors job here taking place. That's all it is. Those tax cuts, oh yeah, you give us that money and we're going to invest it in the economy. There's going to be a lot of capital expenditures taking place. Wrong. Share buybacks, financial engineering, retire those stocks, manipulate your earnings per share, have your analysts beat up on the earnings projections, and then it makes it a low hurdle to beat. And lo and behold, everybody beats, and off to the races we go again. It's such a game. It's such a con game, it's not even funny. All I'm asking for is free market capitalism. Let the chips fall where they may. Same thing I say in regards to the politics. That's all I'm asking for. Let the truth be known and may justice be served. I don't care if it's Democrat, Republican, Trump, Clinton, Obama. I don't care. That's all I'm asking for. Truth, justice, free market capitalism. It shouldn't be a hard request. It shouldn't be a hard ask here in the United States of America. Those are the things that I thought we stood for, but clearly that is not the case. We continue to have the coronavirus. That's the new headline. We're going to get to that, but let me talk here real briefly about some other things in the marketplace. We have oil. It was somewhat of an up day. There was a little bit of an explosion. I don't know if some of you caught this at an ExxonMobil plant down south. So there was a little bit of a spike in the price of oil, and then there's obviously some more rumors coming out of OPEC that they're going to cut their supply. It doesn't make a difference. This is just day-to-day noise. Believe me when I tell you, we know this because we have seen geopolitical risks in the past, primarily centered around the Iranian, U.S., Saudi Arabia tensions. We've seen those massive spikes. They've lasted for a couple days, maybe a week, and then right down they go. This is not going to be any different, okay? At least in my opinion. So we have WTI trading at $51.36 a barrel. We have Brent, the international metric, trading at $55.69 a barrel. We have natural gas, which also had a little bit of an up day today, trading at $1.84 per million British thermal units. Gold and silver somewhat mixed, but gold is right now trading at $1,576 an ounce. Silver, $17.58 an ounce. And then on Uncle Sam's Treasury, still hanging up there on a yield of 1.61%. So a little bit of a risk-on mentality because we had the U.S. Treasury 10-year trading in the 1.55, 1.56, 57 range for quite a while, pretty tight in that range. But now there was some selling, obviously. Risk on, risk on. Buy stocks, buy stocks, buy stocks. That is what the market wants you to believe is the right move. And who knows, maybe it is. Maybe it is. Maybe this time is different. I don't think so. I think those are very dangerous words. I do not think that the business cycle is dead, but this thing, it just continues to go, go, go. But we have seen this before. We have seen this before. History may not repeat, but it does rhyme. And it's not just here in the United States. You can look at these types of gains internationally. They do not end well. This time is not going to be any different. It's just a matter of when. It's just a matter of when. Then we have on the domestic front, when it comes to our budget, we have the U.S. January budget deficit larger than expected. The United States recorded a budget deficit of $32.6 billion in the month of January, switching from a budget surplus of $8.7 billion a year ago. So, starting off the year right on track. Doesn't that sound dandy? Doesn't that sound like the greatest economy ever? Month of January, a budget deficit of $32.6 billion. Huh. No surprise there to us, folks. We know there's going to be another $1 trillion deficit this year and next year and the year after that. You know, I saw a ridiculous article. I didn't even read it. Just basically the headline in a very short blurb I guess there's some congressman praising the president and his budget. $4.8 trillion. Remember, that's that monstrosity. $4.8 trillion for 1 year. Saying, oh, this is a good budget. Fantastic. In 15 years, we're going to be back in the black. Oh, my God, does this guy, where did he go to school? Does he understand mathematics? What is he smoking? You can't make this stuff up. This guy thinks that we're going to be back in the black in 15 years. Does he have any idea what's coming? Does he know the demographic shift that is taking place right now with the baby boomer generation and all these people retiring? That's one of the reasons why I think you have somewhat of the participation rate ticking up ever so slightly. Because again, if you look even deeper into that, you see older Americans getting back into the workforce. Okay? This to me is somewhat of a mixed signal. People, if you've worked for 40, 50 years of your life and you retired, and then you're in retirement, it's one thing if you do get bored, if you don't have hobbies, if you don't have grandkids or family, or you don't want to travel, or you did all that stuff, or it's just not for you, and you get bored and you say, okay, I want to go back and do something for 20, 30 hours a week. Okay, that's fine. That's fine. And it's good that you have the opportunity to do so. But if you don't, and you've come to the realization that, oh man, I don't have the money. Cost of living keeps going up. I can't retire. I have to go back to work just to maintain my lifestyle in your older years. That's not a booming economy, ladies and gentlemen. That's what this is. This is older people coming back into the workforce, most likely because they have to, because they didn't have enough savings to make it in their later years. Now, again, it might be a good thing that they have jobs available to come back to, but you understand what I'm saying here? We're going to be back in black, according to this one congressman, I forget his name, in 15 years. Do you have any idea the wave, this demographic wave that's going to hit? We talk about this in our book, The Cynic's Guide to Investing. We hit it right on the head. It's coming to fruition. This is demographics. You're not going to stop it. People get older. This is what's going to happen. And you compound that with what central banks the world over are doing. You compound that with an out-of-control government with trillion-dollar deficits. And you compound that with corporate balance sheets just ravaged with so much debt that is starting to come due. And it's starting to come due in massive waves. You're just asking for nothing but trouble. And nobody talks about it. No Republicans, no Democrats, not the president. Nope, everything's fine. Everything's dandy. Don't worry about a thing. The world's second largest economy in China is suffering from the coronavirus. We still don't know all the facts about it. But it's a headline risk. It's a headline risk, and it moves markets. It just moves them up, by the way. Can you imagine if and when they actually get this thing contained, what the markets are going to do? They've rallied on the bad news. What do you think's going to happen if there's actually good news happening? They're just going to take off. Now, how long-lived that's going to be is anybody's guess. But they just keep ticking up. Same thing with the Apple story. Another one is Nike. Nike came out over the past couple of weeks. Said, oh yeah, this coronavirus is going to hit us. Their stock's up 2-3% today. Cannot make this stuff up. Second largest economy in the world has basically been shut down for a month and a half, with no end in sight, by the way. No end in sight. You have airlines not going back in there until April. You have countries not allowing people from China into their countries for another month. So you have all those tourism dollars down. Supply chains, you have car companies in South Korea shut down because they get a lot of their parts from China. Oh yeah, just keep going up. Starbucks closing down. Nike's closing down. Apple stores got to shut down. No, we're just going to keep making money. Just keep printing money. Just keep doing it. No problem whatsoever. You can't make this stuff up. We are living in the land of Oz. Cannot make this stuff up. I said on yesterday's podcast, I said, you want the cure? GlaxoSmithKline, Gilead Sciences, Johnson & Johnson, Merck, Pfizer, do not investigate a vaccine or any type of cure. You don't have to. You don't have to. You know who's going to cure this? Jay Powell at the Federal Reserve. All they're going to do is print money, and the coronavirus will magically disappear. That's the cure. Christine Lagarde at the ECB, she'll start printing more money. Magically go away. Bank of Japan, People's Bank of China. Don't worry about the science. Don't worry about vaccinations. Just print money. That'll solve everybody's problem. You need a bill paid? Don't pay it. Go down to Constitution Avenue in Washington, D.C. It's a big white building. It says Federal Reserve on it. You can't miss it. Go knock on the door and ask for money. Let me know how that goes, by the way, because I might join you. So an interesting thing, some analysis that I came across when it comes to the coronavirus. We're sort of in an interesting dynamic here because, one, the Chinese Communist Party is going to lie to us. There's no ifs, ands, or buts about it. They're just going to lie to us. We have no idea what the numbers are. It might be 5 to 10 times worse than what they're actually telling us. And that's probably a conservative estimate. And this goes right back to the question of credibility and sort of the trade deal. And something that we've been talking about here before. Because I raised a concern. I said, what happens if the markets start to believe the Chinese Communist Party, President Xi, over President Trump, the leader of the free world? I said, we're going to be in a lot of trouble. Well, here we are. Here's that experiment. It's right now. What's taking place? We have the Chinese Communist Party releasing headlines, making statements. We have no idea if they're true or not. But the market believes them. The market believes them, or at least the market wants to believe them, that they have things under control, that this is contained, that warehouses and manufacturing facilities are going to get up and running again. I don't think so. Maybe to some degree. But here's the interesting analysis I came across. And I think this is legitimate. I really do. China, the Chinese Communist Party, wants to maintain its power and authority. There's no question about this. There should be no doubt. Their economy is very much interconnected with the rest of the world. Very much so when it comes to supply chains. Very much so when it comes to manufacturing and exporting their products to the rest of the world. China is the second largest economy in the world. The Chinese Communist Party knows this. We know this. This is no surprise. But they have some calculus that's probably taking place in their minds right now. A balancing act, if you will. How far do we take this coronavirus outbreak? Meaning, how far do we take the containment, the quarantine? Because the longer this thing carries on, the longer it continues, the bigger hit we are going to take economically. The longer this outbreak continues, the more likely it is that European countries, companies within the United States, companies within Asia and elsewhere around the world are going to start moving their supply lines. They're going to say, oh, we can't be doing business in China. We got to continue doing business. We can't do this in China anymore. So we're going to look at Vietnam. We're going to look at Malaysia. We're going to look at Vietnam, Cambodia. We're going to look into India. You know what I'm saying? They're going to start shifting things. So now China, the Chinese Communist Party, is like, we can't have this. And of course, they cannot have any type of internal political upheaval either. They're on a balancing act here, a big one. So, is it possible that the Chinese Communist Party is making the decision, you know what, we're going to send people back to work. At least, a little bit. We're going to drip them out there little by little. It might not be 100%. But maybe 25% in this factory, 50% in this province or this town, get back to work. Not everybody, but we're just going to drip it out there and see what happens because we cannot have the economy shut down for too long. So despite the fact that they might know how bad this thing really is and that it could really turn into a pandemic affecting many, many nations and many, many people, they're going to say, oh, well, that be damned because we cannot allow our economy to go down. Can't happen. So they're sort of making that calculus. And a good analogy that this one analyst put out there was sort of like the invasion of D-Day, which, there was no question that the Western allies and analysts knew that this was basically a suicide mission, that there was going to be an immense amount of loss of life, an immense amount of casualties that was going to take place. But if they didn't do it, then that could have been the end of the war and Germany could have won and that could have been it. The other side of that equation could have been even worse. So we can send our boys on that beach, knowing that a lot of them are going to get killed, a lot of them are going to get wounded, or we can do nothing, and that's pretty much going to solidify this thing, and we're going to lose. That's sort of, I think, the calculus that's taking place right now within the Chinese Communist Party. Now, we don't know, because they're not going to be upfront with us. The World Health Organization is not going to be open and completely honest with us. The CDC, the United States government, is not going to be entirely open and honest with us. The day may come when the horse is out of the barn, the cat's out of the bag, some whistleblower leaks something, and then all hell breaks loose. That could happen. But I remain very, very skeptical of anything that the Chinese Communist Party tells me. I mean, I'm skeptical of what the United States government tells me. There's no question I'm going to be extremely skeptical when it comes to the Chinese Communist Party. I think this thing is serious. I do not think this is a typical flu. I mean, when do you see cruise liners shut down and quarantined? When do you see cruise liners who are refused the opportunity to dock within certain countries? I mean, this happened. There's some cruise liner, over there in Asia, they were denied by like Thailand and Vietnam, and I think finally Cambodia let them dock. I mean, this is not the typical flu, ladies and gentlemen. You do not quarantine 300-400 million people. That's the size of the United States. And say, oh yeah, this is just a typical flu. There's nothing to see here. The rates are going down. Cases are going down. People are recovering. The death rate's going down. This, that, or the other. Because another thing that this analyst pointed out, which is also interesting and also true, by the way, or it could be, is it's not just the mortality rate or the death rate that we have to sort of focus and pay attention to. It's also how severe is the virus. That is to say, how much health treatment is going to be needed. How severe are the symptoms? You might not die, and of course that's a good thing, but are you going to have to be hospitalized? Because if a significant portion of those who contract the virus have to be hospitalized, that in and of itself is a big problem, economically speaking. Because people aren't going to be working. Healthcare staffs, hospitals are going to be overwhelmed and overrun. Are they going to have supply shortages? And then this whole issue can compound itself again because now they're not unable to treat people because they have a shortage. You get what I'm saying? So this thing is far, far from over. The Chinese Communist Party most definitely has a vested interest in putting out bogus headlines to make it seem like they have everything under control. Hell, European countries, everybody, the United States, everybody has a vested interest in this thing coming down. I want this to be contained too, because I do think this thing can get serious. So that's just some interesting analysis I came across. Thought I'd share that with the audience because to me it makes a whole lot of sense. And, it just continues to go on with the theme of today's podcast with the disconnects between reality, valuations, the fundamentals, and then what the stock market is doing. Not just in the United States, but around the world. I mean, it just continues to go up. It's not going down, and we know why. We know why. Because they're printing money. This is not the greatest economy ever in the history of the United States. It's not even close. You have your list. Look them up. Construction, retail, manufacturing, industrial production, transports, federal, state, and local tax receipts, corporate profits, and jobless claims. Look them up. I'm not making this stuff up. That's the real economy. It's not just the unemployment rate. I mean, that's what you want to hear. That's what the president keeps harping on. It's the unemployment rate. It's this, that, you got to dig deeper than that, folks. You have to dig deeper than that. It's not that difficult to do. It takes 2 minutes. All right, I'm going to wrap up this podcast here. Thank you so much for joining me. Please like, share, subscribe, get the word out, and leave your comments. We do love hearing from you. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Kreitis. Godspeed.